Welcome to another interesting section with me where I'll be teaching you how to use QuickBooks for auto part shop. So if you run an auto parts business, maybe you buy and sell car parts or you offer repair service or maybe you do both. So I'm going to share how you can use QuickBooks to manage your books of accounts. So this is what we're going to learn. Now I'm going to show you how to set up chart of accounts for your QuickBooks. This is chart of accounts. So how to set up chart of account for an auto parts shop, and then we're going to be looking at how to add inventories of your auto parts, and then how to set up your opening balances. So we'll look at how to add inventories, their quantity on hand, the cost, as well as the sales price of each of these auto parts. Then you would also be able to add your customer record. I'll also show you how to add your customer record as well as their receivable balances. Then we'll discuss how to add your vendor's account and then their payable balances. Then we'll discuss how to add bank accounts, including foreign currency accounts, as well as credit card. Then I'll also show you how to categorize your auto parts business into segments. So maybe you have auto part businesses in different locations, or you want to categorize them by brand and you want to know which of the car parts is actually selling more than the other. Is it Toyota? Is it Ford? Is it Mercedes? Is it whatever car brand that you actually sell their parts? You will also be able to see which of them is selling faster. That would also help you know how to streamline your business by segment. Then I will show you how to activate sales tax for your auto parts business. Then we'll then move into transaction proper, where I will show you how to create invoices for auto part supplies, repair services, and then receive payment from your customers. Then we'll also discuss how to create sales receipts for cash transaction. So I will tell you the difference between invoices and receipts. Then we'll also discuss how to track your inventory purchases. When you make order for new car parts, how do you post them on the system? Then we'll discuss how to record business expenses. Then we'll then move to banking, where we'll look at checks and payments, transfer funds, use register reconciliation, and then we'll then discuss the financial report, where you will see how each of the transactions that we have posting have helped us to generate a financial report that will help us understand the position of our business. So let's move to QuickBooks properly to explain that. So this is QuickBooks software. This is QuickBooks. So this is what we're going to demonstrate all that we've discussed earlier. So the first part is, how do you set up chart of account for auto parts? Before you start using an accounting software, chart of account is the most important part of your setup because it's an account that categorizes all your transactions. So everything you're going to post as regards your auto part business would either be an income head, expense head, asset, or liability. So that is why it's good for you to ensure the chart of accounts are properly set up. So to get to chart of account section of your QuickBooks, you go to list, then you select chart of account. Now note this part. Whatever guide I'm going to share with you on how to use QuickBooks for your auto repair shop also works for online. So whether you use desktop or use online, the process is still the same. The only difference is where the icons are located, but the workflow, the accounting systems remains the same. So this is chart of account for your auto parts business. So you can see here that at the point of setting up this company, we selected automotive and repair. So QuickBook is able to suggest chart of account that is close to our line of business. So it's now left for us to start setting up more account heads. For instance, let's look at the revenue. Now, the revenue for an auto parts business will be sales, meaning you sell auto parts. Now, what if you go beyond sales and you offer repair services? So it means we are going to add more income account. Set up your income account, you go to account, you select new, and then we select our account type as income. Categorizing your account name is very important in QuickBooks because it is the account type that the system will use to post the transaction to that respective financial report. So if I'm going to add auto repair service as an income, the most important part of this setup is the account type. So here I will say auto repair services. So auto repair services might also be another part of your auto parts business. So, like I said before, you must select income when you are treating an income head. So, system is not going to treat auto repair services as an income automatically because the name is auto repair. No, this is just a way of identifying the transaction. What is important in this setup is the account type, which is your income, and then we click close. So, as an auto repair shop, I can also review the sales here, right click, and then edit and say sales of auto parts. So to make it more specific, so that we know the type of sales we're talking about. So our two major income heads are auto repair services and then sales of auto parts. Now, another important part of your business is the direct costs, the direct cost of those auto parts, because as you're selling them, system needs to help you account for the direct cost. So that's what we call parts purchases. That's number one. So which is the direct cost of that part that we actually selling. Then another important part of this direct cost is the usage, consumables. Now let's do it this way. First one is when you sell a part, system already identify the cost of that part which you're selling. Then it will compare the cost of that part with the sales. That's the amount you realize from the sales of that part. That's one. The second part is what if you are repairing a car, you're repairing a truck. How do you account for the parts that has been used? So that means there's also another direct cost that need to be taken into account. So you go back to your chart of accounts, right click, and then click new. So this will be direct costs. You click new. So you give this a name. So this direct cost is different from the first one. The first one helps you track the direct cost of that app, the parts. The second one here, it helps you track the direct cost of using that particular part. So here we can say auto parts used, auto parts consumption. So autopart, whatever name you want to call it, now as long as it helps you track the value of auto parts that was used. So it's important you do that. Now we also have what we call subcontracted services. Now, if you have other companies that you work with, let's assume that you got a car to repair, and then you feel that, oh, this car is actually big, or maybe the skill required to get this car back to its previous state is actually something big, and it requires you to partner with another auto repair company. So that the amount you pay them is what we call subcontractor services. So it's also a direct cost that is connected to your revenue. So these are the most important revenue heads you need to set up for your auto part shop. So we've talked about the income, we've talked about the direct cost. Then you have the expenses here. You can see automobile expenses, advertising and promotion. You have your bank service charge. You have computer and internet expenses, equipment rental, insurance. So if there are other type of expenses that you incur, you can as well set them up right here. If you want to set them up here, you go to account, you select new, and then first make sure you select the right account type. So when I'm setting up an income head, it has to be income. Now, if I set up an income head and I select expenses, system will treat all transaction that passes through that account name as expenses rather than income, and that will not give me the right report. So if I'm going to add chart of account, I need to be sure that my account heads are ready. The another part again is I'm setting up direct costs. Then I have to come to other accounts and select direct costs. So you can see that you have different account heads to set up on QuickBooks as an auto parts company. So let's look at the other things we need to learn here. So how do you add inventories of auto parts, cost and sales? This is one of the most important parts of your auto parts business. This is very important because auto parts business, you manage a lot of inventories. So how do you upload your inventories? How do you set up your inventories on the system? So first we need to check that the inventories are activated on the system. That's number one. And number two, we need to also activate multiple currencies. That's key. We need to activate multiple currencies because you will notice that on this chart of account, we are here to set up our bank account. So we go to edit, preferences, multiple currencies, company preference. So here you say, yes, I use more than one currency. So you come here, you view more currency. So you see that QuickBook allows you to set up your home currencies. So whatever currency you use, you can see that there's a room. Whether you use the dollar, you use the euro, you use the pounds, you use the naira, you use the sefa, whatever currency you use, you can see that system allows you to set up your home currency. This is very critical because when you're generating your financial statement, it is what you need to report your numbers. So here we're going to select the US dollar as our home currency, and then I'll click on OK. So system is then going to close my QuickBooks and reactivate QuickBooks again. So that means multiple currencies is now available for us on QuickBooks. So we're waiting for the system to activate multiple currencies before we proceed. All right, so we have the account up and running again. Okay, that's fine. So let's confirm that our multiple currencies have been set up on QuickBooks. You go back to Edit, Preferences, Multiple Currencies, Company. So you can see your home currency is US dollar. So we've done that. Now, to add our bank account to your chart of accounts, you go back to chart of accounts here. So we want to add our bank account. You go back to accounts, you select new. So what account type are we going to select here? Bank. We're not going to select income because it's not an income head, it's not an expense head, it's a bank. So you have to select the right account type that suits the account name you want to add. Then you click on continue. So here we want to add Bank of America here as one of our bank accounts. Our currency is in US dollar. So you go to opening balance here. So you enter the opening balance of your auto repair. Now, what is the statement ending date? So let me explain this. Now, for businesses, it's either you're setting up QuickBooks at the beginning of the year. So every business has a financial year, which most people use as January to December. That's where most small businesses actually that's what they choose as their own financial year. But let's look at a company that is more organized, that is actually outside that January to December financial year period. So let's assume your financial year runs from July to June. That means it starts from July and ends in June, right? Now, the question is, what balance are we going to impute right here? Let me take this out. What balance are we going to impute right here as our opening balance date? Now, that depends on you. Now, if you want to use beginning of the year balance, that means your balance as at the end of previous year into the new year. So what is the end of previous year? The end of previous year is June 30 because your new year starts from July 1st. So June 30 is the end of the previous year. So what you're going to impute here is going to be 2,300,000 USD. So that's the balance in your book. That's the balance in the bank account as at the end of previous year. Now that we are in August, it means that you'll be required to post all your transaction manually from 1st of January to the current date. So that is what beginning of the previous year means. We call it beginning of the beginning balance. Then, if you want to use today's date assumes that you are going to start your book as at today. So what is today's date? Today is 11th of August. So it means that while maintaining the usual financial year from July to June, I'm going to set up my book as at today. So the difference between the first one and second one is that the first one requires you to start from previous year and then you start posting your transaction. Now at the end of the year, people will think, or your auditor will think, or whoever is reviewing your book will think that you have been using QuickBooks right from the start, right from the onset. You can even go as far back as 2 or 3 years, as long as you have details of all your transactions intact. Now, today's date means you're going to ignore previous balances or previous transaction and start posting your book as at now. Now, the advantage of using today's date is that you are able to get started immediately. For companies that don't have previous record, for companies that don't have an organized record, that's the perfect way for them to get started. So here we're going to assume that our balance is as at the end of June. So I will go back to end of June. So June 30th. So which means we're picking our balance as at the end of our previous financial year. If your financial year ends in December, the balance here is going to be as at 31st December 2021. But if you want to go with the second option, you pick today's date, which is what? 11th of August. So it's left for you as a business owner to decide on the one you want to choose. Now, the advantage of going with beginning balance is that you are able to capture your transactions for a whole year. So that gives you accurate record in QuickBooks. But if you use the other one, some part of your records will be missing. So if you generate a full year in QuickBooks, you will still have to rely on previous period or find a way to incorporate previous balances. So either way, I would strongly advise that you start with beginning of the year so that you can have all your records intact and then able to get the best value from the system. So here we're assuming that our beginning balance is July, so we're going to pick 30th of June 2023, and then I'll click OK, and then click on Save and Close. So we've set up our Bank of America account. So I can set up as many bank I want. So let me go back again. I'll go to banking, and then I can say Chase Mobile. So I have Chase Mobile account. Then click this, and then enter my balance too here. And then same 30th of June 2023. Then click on OK. So we have them right here. So what if you have foreign bank accounts? Let's say you have an establishment in Nigeria. You go to new bank, click continue. So here you have your Zenith Bank account. So your currency here will no longer be dollar. Your currency will be in Nigerian naira. So you select your foreign currency account. So this is Nigerian naira. So you can see for selecting a foreign currency account, you have the option of entering the exchange rate. So 0.009, and then you enter your balance in naira. You click OK. Statement ending date here. So this is it. So you can see how we've been able to expand our chart of account. We've added the income, we've added the expenses, direct cost, and then we are now adding the bank. So you can add every revenue head, even your liabilities, you're able to input them into the system. So let's move to the inventories proper. So inventories is at the center of an auto parts shop because everything you do in your business is actually inventory. You are buying car parts, you're making sure that those car parts are properly accounted for and you don't want any missing. So how do you set up your parts in such a way that you're able to tell the number of each of the parts available? You can even categorize them by brand, depending on the one you want, or you can lump them together. So whichever way you want to do them, you go to edit, preference. So what am I trying to do? I want to see if the system is actually activated to allow us post inventories. So edit, preferences, and then you will select item and inventory. So you can see here, so the system is not activated yet. So you see activate inventory and purchase order are active. So this is the first thing you want to do before you start using inventory. And then one, if not enough to tell. So when quantity I want to set exceed quantity available on hand. Yes, you can tick that. When quantity I want to set exceed quantity available. So you can tick whichever one that's fine with you, and then go to OK. Click OK. So this is very important. Before you start using inventory, you have to be sure that the system is available or the system has been designed or configured to allow inventory. Because I see that many times a client would call that, oh, this QuickBook doesn't allow inventory. I'm not seeing inventory right here, simply because they are yet to activate. Now, if you use the QuickBooks Online, you have to use the Online Plus. Online Plus allows you to use your inventory. So for an auto parts repair business that is looking for the best QuickBooks Online to use, maybe you want to go cloud, you use the QuickBooks Online Plus. Then if you want to use desktop, QuickBooks Premier is fine. QuickBooks Enterprise is good. Why am I recommending QuickBooks Enterprise and Premier? Because they gives you as they allows you to set up unit of measure. That feature is not available on Pro. So Premier and Enterprise are best for an auto repair if you want to use the desktop version. So you go to list, item list. So this is where we're going to set up our auto parts. So if you have your auto parts in Excel, you can run bulk upload. System allows you to run bulk upload. So if you go to, you see add multiple items. Then if you have them in pieces or something you can post one after the other, that's what we're going to do right here. So if you're looking for a guide on how to upload bulk inventories into the system, you can drop a comment on this video. I would respond to you and show you how to do that. So you go to new. So what are we adding? Note this part. You will see that we have different types. We have service, we have inventory part, we have inventory assembly, non-inventory part, other chart. So for you as an auto part shop, you're going to work with the inventory part. So the inventory part is used for goods you purchase, track as inventory, and resell. It's used for goods you purchase, track as inventory, and also resell. So here you will go to name. So what are we going to add? So let's say we have car tire. So that's one of the inventory parts, the auto parts that you sell. So car tire, we want to enable unit of measure. So how do you measure this car tire? We want to measure it in pieces. So you click others. So this is the feature that is not available on Pro version of QuickBooks, but you'll find that on Premier and then Enterprise. So here, how much did you buy this? What's the average cost on ground? So what are we doing right now? You actually uploading all the existing inventories in store. So as a business that runs an auto parts shop, what are you going to do? You are going to do a count. So I advise you to run an inventory count, run a fresh count. Don't use your existing record. Run a fresh count of all the inventories you have on the system. Now, in the shop, I mean, list the names of the inventory in Excel. First column, second column is the quantity on hand as at your opening balance date. Maybe you want to use 30th of June. So how many of each of these parts do you have as at 30th of June? If you want to work with today's date, how many of this inventory parts do you have as at now? So, and then what is the average cost of each one? That's what you post here as average cost. So here, let's say this is 23, let's say 23 USD for instance, and then what's the average selling price? If the selling price is not fixed, you can leave it like that. Now, this car tire, when you sell them, where does it go to? It goes to this. So you can see when you sell this car tire, it goes to sales of car parts. Now, do you have a preferred vendor that you buy this from? If you have a preferred vendor, then you can add the vendor right here. But if you don't have, you can leave it. How many car tires do you have in store? So we have 1,200. So it means we have 1,200 pieces of this item in store. So 1,200 multiplied by 23 will give you total value of this. Now, assuming you want to control the quantity of this car tire you have in store, you don't want to run out of stock and then you don't want to stock them beyond your limit. So you can say, don't want to have more than 5,000 in store. So this is like maximum units. What does that mean? It means that when the quantity on hand reaches 5,000, system will alert you so that you can stop ordering new inventories. So that will help you control the quantity you have in store. At the same time, you can set your minimum to 200, meaning that when the quantity on hand reduces to 200, system will also alert you that you're running out of stock. That would also help you control so that you don't run out of stock. So it's a way of ensuring that you don't run out of stock, but at the same time, you don't stock more than is necessary. So you don't tie your capital down. So these are the few things that you need to know. If you have manufacturer's parts, whatever you want to set up, you can do that here. And then you click on OK. Now, there are different ways to categorize your inventory. You can categorize them by car brand. You can even categorize your inventories by the type of car. Maybe this one is for truck, this is for normal car, this like, whatever categorization you want to use, the system allows you to do that. Then we're done with this, you click on next. So the next part is car engine. So under car engine, you want to, it's also in pieces. So how much did you buy them? So let's say 1,500 USD. Then when you sell this engine, it goes to sales of auto parts. So how many of these engines do you have in store? You have 859 units of that. So 859 units multiplied by 1,500 will give you this value. So you can also set your maximum and minimum reorder level. Now, note something again. You're supposed to change your opening balance date to 30th of June 2023. So the first one we entered was supposed to be changed to 30th of June 2023. We'll review that and then we'll click on OK. So this is the first one we keyed in here. I will double click here. So how do we change the dates on the system? You go to lists, chart of accounts, then we're going to locate our inventory. So this is the inventory assets. Double click on inventory assets. So this is the car parts. Double click on it here, and then we're going to change the date right here to 30th of June. Then you click save and close. So saved it. So if there are other inventories you want to add to the system, you go to new, So let's say this other inventories you want to add is, let's say, car seats. Then how many do you have in pieces? Then what's the quantity? You have 230 units in store. What's the cost per one? Let's say 15 USD. So 15 USD times this will give you this amount. Then when you sell this sales of auto parts, then you click OK. So let's work with these three. So you can add as many inventories as you want. So the idea is just to guide you on how to set up your inventories of car parts. So make sure you've done your inventory count. You have the an actual number of inventories you have, and then the cost per one. Then you can bring them into the system. So with this that we've done, if I go to report, click on this is report, click on inventory valuation summary, you can see that system is able to tell me the inventories I have, that's the car parts, the quantity on hand, the cost per one, and then the value. So you can see here. So the cost per one, which is the average cost, and the quantity on hand will give us the value. This is what we're interested in. This is the value of using QuickBooks. This is the importance of using QuickBooks for your auto parts shop. You are able to generate a report showing you the quantity on hand at every point in time. So let's go back to the cost outline to look at other things we need to know. Then let's look at how to create customer account and their receivable balances in QuickBooks. Now, after doing this setup, let's now add our customer, because this is a very important business party. We don't just buy the car parts to keep, we buy them to resell. So it's important you track your customer. So it's also possible that you have existing customers that you sell to, or existing partners that you do business with. So on QuickBooks, you can actually post those customer record or upload them to the system. When you go to customer centers, so customer center is where you manage all your customer records in QuickBooks. Now, this customer center, you can add a new customer, you can edit an existing customer, you can only delete a customer with a balance. If a customer already has an existing balance, you cannot delete them. So you go to new and then you select new customer. So this is where you're going to add all your customer records. So let's assume that you have a company like FedEx Limited as a client. Maybe you supply their auto parts. So you come here, you enter FedEx Limited, and you can also post all the other information. Now, if there's an opening balance here means that as at the time we're setting up this QuickBooks, we still have a receivable balances from them. You quickly impute that here. What does this mean? It means that we have sold a part to FedEx before, or we've rendered a service to them. But as at the point of setting up these QuickBooks, they are yet to pay the full balance. So what we're bringing here is the amount receivable, what they still owe the business as at 30th of June. So you can pick your own date. Now remember, you can always fill this other information right here with your customer profile or customer information, from the contact name to whatever their email address, phone number. So you click OK. So you have FedEx here as receivable balances. Now for posting only FedEx right here, if I go to report, and then it will automatically update my customer balance summary. You can see here. So that's the importance of an accounting software. As you're posting, you're setting up your record, it's actually building your reports in real time. Then you go back to new customer. Under new customer, you have another company called UPS, another delivery company. Maybe UPS is not owing you, so you leave it like that, and then you click on OK. So you can set up customers with or without their balance. Most importantly, the ones with balances has to be accounted for, because those are the numbers that will form your financial reports. So we have them here. Then you can add as many customers as you want. If you have customers in Excel, or maybe your customers are much, but you want to bring them in bulk, you can as well use bulk import. So add multiple customers. You can use that to bring in bulk imports. So that's for customer record. Remember, you can edit an existing customer, but you cannot delete a customer with a balance. I can delete this UPS because he has zero balance, but I cannot delete FedEx because he has an existing balance. Any accounting software that allows you to delete a customer record, it's not good. It's not a good standard accounting software. It's not advisable, because it leaves room. It gives your users room to manipulate that record. So if I go to FedEx, right click, and then I delete, you can see here QuickBooks cannot delete this name because it has a balance. So normally you're not supposed to delete a record that has a balance, because the most important figure, the most important data you need in that record is the balance. So if you're able to delete the balance, then it's going to alter the record, and that would not give you everything you want on your system. So if you want to take that out, you most likely pass a journal entry. That is if the customer no longer exists again. So let's move to the next part, which is your vendors and payable balance. If you go to your vendor record, so your vendor record is where you post all the information about your vendor or part suppliers. So I can go to new vendor. So assuming I have a direct business with a vendor that sells this part. So let's say Toyota is a vendor. So I can come here and click on Toyota, enter Toyota. So the same way I'm able to track my receivable, I can also track my payables right here. So I can come here and say I owe Toyota $90,000 as at 30th of June 2023. So Toyota is a foreign vendor for us. So you come here, view more currency, and then you can then enter, let's see, the currency of this country, Japanese yen. So let's assume it's Japanese yen, and then you click OK. So we have entered this particular vendor balance. Now remember, the balance is zero right here. Now I actually imputed the balance, but because I changed the currency, so whenever you change a vendor currency, maybe to a foreign currency, then you have to bring in the balance as journal entry. So I'll go to company here and then make journal entries. So what currency are we bringing in? Japanese yen. So what is Japanese yen to a naira, to a US dollar? Let's say 190. So this would then be uh, account payable. You can see it. So we're going to have account payable in USD and account payable in yen. So anytime you set up multiple currencies and system detects a foreign currency vendor, it will automatically create an account payable in that vendor currency. So you can see we have account payable in USD. The same thing also applies to your customers and receivable balances too. So you have customers and receivable balances in your local currency, and then you also have customers and receivable balances in foreign currency. That's once the customer detects that you're adding foreign currency. So this will be account payable in the name of. So you have to impute the vendor, because without this name, system would not know the payable account that this particular balance that we're going to post is attributed to. Then you have 90,000 USD. So this will then go to our opening balance too. So you can see being opening balance, blah, blah, blah. Now, what's the exchange rate? 190. As at when? 30th of June. So this is how you post the opening balance of a foreign currency vendor or foreign currency customer. Because if you go directly to customer center and vendor center, system will not be able to post that. So you have to use journal entry to impute that. And at the point of using journal entry, you have to switch your currency to that vendor's currency. If you're doing for customers, you have to switch your currency to that customer's currency, then use journal entry to bring them in. Then we'll click on save and close. So you can see here, we already have the balance of that vendor. So you can also bring in other vendors' balance. It's not limited to supply of auto parts. Even a service provider should also be treated as a vendor. Your subcontractors, they are also vendors on the system. So let's move on to see other areas that we need to discuss. So we've talked about the bank accounts and foreign currencies. Then how do you categorize your auto part business into segment, location, or other brands? Now it's important for us to do that. Now we sell auto parts. Now for us to streamline our operation, to know what part of our business is generating most fund or is actually most profitable, we can actually streamline that business into different parts. So I will go to lists. Now, there is a feature called class, which I'm going to activate right here. Now, class in QuickBooks helps you departmentalize your operation. So I'll go to edit, preferences, select accounting, company preference. You can see here, I'll activate class, then click on OK. So if I go back to my list again, you can see that we have class list. So class list is what I'm going to use to departmentalize my transaction. So here I will say Toyota. So what does that mean? It means that as we're selling car parts, we want to know what car part is that, or maybe the car the customer is using, because there are parts that might work for different brands of cars. But here, we want to know the car parts that are coming in more into our store. So we have Toyota, we have Ford, then you have Mercedes, so Mercedes Benz. So you can name as many car as you want. So you have your Lexus. So here you can see, so you can even departmentalize by the structure of the car, either by normal car or your truck or your SUV. So the idea is we want to know the car the customers are bringing into our store more than the other. So that way we will streamline. So if we notice that most of the customers that are coming in with Lexus brand, Lexus brand, Lexus brand. So that tells us that we should be investing more in Lexus car parts or Lexus auto parts. Or if we see that most customers that are coming in the top departments that are making the most sales and then generating most profit is Ford and Toyota. So it means that when we go to the market and we want to order new parts, because we've noticed that when you run this kind of business and you don't streamline your operation by department that is generating most fund, you will end up buying parts that customers don't want, and that will also help, and that will lead to loss, because it's only when a customer comes for a part that you will sell them. But when you focus on parts that are moving more, because you've been able to streamline your operation, it will help you invest more in that part and generate more profit. You don't want the customer to come to your store or your auto repair shop and then you're saying that you don't have what the customer wants because you're not working with data. So that's the essence of streamlining this. And then if you have your business in different locations, you can also streamline them by location too. But I think this works more for an auto repair part so that you can know which part of the brand that is generating most profit for you. So that's how to streamline your business by using the class section of your QuickBooks. Then let's look at how to activate tax for your auto repair business. Now, by law, every business is expected to pay tax. So it's important for you to also learn how to activate tax, because when you create an invoice, you're supposed to charge tax and then remit the money to the government. So you go to edit, preferences, sales tax. This is sales tax, company preference. So here you could see that by default, system is actually selecting no, meaning that we don't charge sales tax. So for us to do that, you click on yes, then we're going to add our sales tax to the system. So you add your sales tax. So what's your sales tax rate? So let's say your sales tax rate is 15%. So add the one that suits or that is tailored to your region. So make sure you reach out to your tax consultant or your accountant or financial advisor for a rate that is applicable in your region. So who is your tax agency? You come and you add new. So who is your tax agency? So it's, let's say assume that you remit to IROX, Internal Revenue Service. Now, when you do that, you also need to activate, you need to select an option that identifies this IRS as a tax agency. So you go to add the additional info, vendor type, and you say this is a tax agency. So that helps you differentiate this name from any other vendor that you're adding. Remember, we're adding this person as a vendor, but it's not just an ordinary vendor, it's a tax agency. We owe them. So you click on OK, and then when do you pay your tax? Maybe you pay on a monthly basis, quarterly or annually. Then what accounting method do you use to calculate your tax? Is it on accrual or cash basis? Now let me differentiate that. When you say accrual basis, it means that when you sell on credit, you're supposed to pay tax on that sales, even though cash has not been collected. When you use cash basis, it means you're going to pay tax only when customers have paid you. So if I sell or I make a sale of over 100,000 USD and they are all on credit, if I use the cash sale, my tax is zero because the customers are yet to pay me. But if I use the accrual basis, I'm going to pay tax on the 100,000 USD. So that's the difference between the two. So you also need to reach out to your accountant on the method of accounting for tax that is applicable in your region. And then you click on OK, and then system is going to save and close. So that means we have activated tax on this account for our auto repair business. So let's look at other outline. Now, how do we create invoice for auto parts supplies and repair and receive payment? So this is the most important part. Now, why have we taking time to look at the setup part of the system? It's like a foundation. Everything we are going to do right now, they are actually built on the setup that we've done before. from chart of accounts to the banking to the inventory to the customers to the vendor to the tax. We need them set up. We need them properly set up for us to post transaction, because if you want to post transaction, let's assume you want to create an invoice. You won't even be able to save and close until you add that customer record. And if you want to make payments, you can save and close until you add your chart of account head, like your expenses or your inventories. So that is very important. So the background is that your setup has to be complete. So, in using an accounting software, there are three-step processes. First one is your setup process, which is the foundation. Second one is a transaction posting, and then the third one is the reporting. So, we just concluded the setup part. Now we are on transaction. So, let's look at how to create an invoice. Look at the workflow here. So all that you see right here on our home screen, they are workflow that will help you run your auto parts shop very, very well and efficiently. So they're not just there as designed to make it look so good. They are there to guide you. So let me share an instance. Now let's assume that a customer sends in a request that, oh, I want this product. I want this product. Now, it's either you have it in store and you don't have it in store. If you have that product in store, what is going to happen? You're going to send the customer an estimate, which is like a price list or a proposal or a quotation stating list of the products they've requested and then the price. Now, if the customer wants it, then you can then supply and create an invoice. When you create an invoice, what happens? You receive a payment. The moment you receive a payment, you record deposit. Now, what happens when that item is not in store? If you don't have that item in store, what do? It becomes a purchase order, because you have to send that request to your vendor. Oh, I need this product. I just got a request from my customer. Then what is going to happen next? Your vendor would most likely send the inventories to you. And when they send the inventories to you, it can actually come with bill or without bill. Now, if it doesn't come with bill, then you have to receive bill against inventory at a later date. If it comes with bill, then it becomes a payable, which you have to pay later. So you see that this workflow, they are guides, they help you understand the system properly. That is why QuickBooks has been very flexible for an auto parts business. So let's move on. Now, the first one is, let's treat the purchase side before we go to the sales side, or let's start with the sales end. Now, we have a quotation. We just received a request from a customer. So you go to sales order, and then from who? Let's say UPS. UPS want us to supply, then let's say car engine, and then car seats, car tire. So you can see here, these are the requests. Note, sales order will not hit your ledger. This is just an order, it's just a request. Now, how many car seats are they looking for? You can see order. They want two, then how many car engines, sorry, car seats, they want five, and then car tire is just one. Now, how much are we selling them? Remember, at the point of setting up our account, we didn't put the price. The reason we didn't put the price is that price may vary, price may not be fixed. So here I would say we're selling this for uh, car engine for, like, let's say 4,500 USD, and then car seats we're selling for 340, and then car tire we're selling for 250. So you can see the class here. So what is the class? The car engine is for what car? For Ford. You click on Ford. Now the car seat is for what car? Lexus. Then the car tire is for what car? Toyota. Now you can see different order for different type of cars, which is the importance of the class we've created. So it helps you categorize your transaction. It helps you categorize your posting. It helps you segment your business. You want to know what brand of car is actually selling more than the other. So we've done that. So based on this request here, as well as our tags, this is the cost, 12,594. Remember, this is just an order, is a request. That's what it means. It's a request. Then we will click on save and close. So let's say we click on save and new. So we'll save that transaction. This is a sales order. So what happened is that I can go to estimates right here. Now, this estimate is like quotation, it's like a response to that order. It's like a response. We've just received an order. Now we want to respond to them. You go to customer who? UPS. What do? You say create sales order. Sorry, please. Let me go back to, so we've created a sales order right here. So let's go back to your sales order. So if you have that supply in store, if you have that supply in store, you go to create an invoice. So we want to convert this sales into an invoice directly. So there's no need to start creating any quotation if we're okay with this, because what you see right here is a request from the customer. So and if this request is fine with them, so we automatically supply them. So you go to create invoice for all sales order. You click OK, so it will automatically convert that sales order into an invoice. Now, it's at this point that the transaction will automatically hit our record. So it automatically reflects on UPS customer ledger account. Now, at the point of creating that invoice, it's also possible that the quantity ordered might be different from the actual quantity you have supplied. So it's also important that you do this. The quantity ordered may not be the same as the quantity supply. So let's say they want 5 car seats and we ended up supplying 4, maybe because of that's what's available in store. Or they even change their request to say, oh, make it 6. So you can actually review this under the invoice column. So you will see ordered and then invoiced. So this is the actual quantity that the system will work with. So based on the new invoice value, they are supposed to pay us 12,200 USD. So you can fill in every other information. Now, if you have terms of payment is the period within which a customer is supposed to pay you. If they don't pay you, then it becomes overdue. So that's what we call terms. So terms helps you track invoices that are overdue. These are the feature you need to generate aging summary to look at customers that are still owing you, and then whether the payment is overdue or not, so you can follow up. So we've created an invoice. Now, once you create an invoice, what do? You receive payments. So you click on here. So we'll save this, and then the next thing is to click on receive payment. Now, receiving payment comes after you have created an invoice. So you receive from who? UPS. System will tell you this is the value of the invoice that has been created. Now, you might receive part payments or full. So let's say we're receiving part payments, 10,000 USD. Then you can see here when you receive that 10,000 USD out of 12,000 will give us a balance of 2,201. Now you can leave this as underpayment or write this off to an extra amount. Now, assuming you're writing this off to a discount account, then you write it off. Or if the customer is going to withhold tax from you, that's when you click on write off the extra amount to withholding tax receivable account. But if this is a part payment, you leave this as underpayment and then you click on save and close. The next thing is you go to record deposits. You can see here, then we're going to pay this money into our bank. So let's say we're paying it into Chase Mobile account. And then you click on save and close. So you can see the workflow. You can see how we moved from sales order into invoice, receive payment, and then record deposits. Now, when you receive another sales order that you don't have in store, let's say you receive another sales order from FedEx, and FedEx is saying, please supply us 5 car engine, and let's say at the rate of 13,000. And this supply is in respect of Mercedes Benz. So you can see here, you selected a car. So you click on save and close. Remember, this is just a sales order. Now we can convert this sales order to purchase order or invoice. You only convert to purchase order if you don't have that in store. But then you convert a sales order, sorry, convert to an invoice if you have that item in stock. So assuming we don't have the item in store again, or let's say we don't want to run out of stock, you click on create purchase order, and then you can see here, so you create purchase order for all items. So what are you doing? You are converting that sales order to purchase order because you don't have that in store, and then you are sending it to Toyota directly to say, oh, let's assume that Toyota also sells this particular brand. So you send that order to Toyota, and then you click from here, you see select item receipts from Toyota here. You click save and close. Now, purchase order will not hit your record until you receive that inventory. So you go to receive inventory with bill, and then you select Toyota. So you see here, an open purchase order exists. Why? Because we just created a purchase order in the name of that vendor. So yes, we want to import this order. So this is the order here. So you don't have to post them again. System automatically imports the purchase order. Remember, it's going to be treated as a foreign currency transaction because Toyota is a foreign vendor. You can see how it has changed. A local order that came in USD has now become a foreign order. So here we'll select the quantity we want. This is the cost. This is the amount in JPY. You can see here, and then what are you doing right now? We're actually requesting for that inventory. Now, assuming that you want to make that order on behalf of the customer, and the customer is aware you want to make that order on behalf of your customer and the customer is aware of it. Maybe the customer is asking you, oh, please, can you help us make order from your vendor? And then we're going to pay you additional fee for that services. Then you can make that billable. So billable is when you are incurring an expenses that would be invoiced to a customer. You're incurring an expenses on behalf of a customer, hoping that the moment you invoice that customer, you're going to bill them for not just that order, but also the services rendered. So you can see 5% markup. That's what you would tick billable. But if this is your normal order that you're going to resell, you uncheck billable and then you click on enter. So we've entered this transaction. So what next are we going to do? It becomes a payable. If you go to reports and select vendors and payable balances, you can see here, this is what we're owing Toyota right now because of that order. So how do we settle them? You can go back to pay bills. So pay bill will show you all the bills you're owing. You can see that there's nothing showing here. Why? Because the bill is in JPY. So you come back here, you sort it out. So when you are paying your bill and then you notice that there are foreign currency bills to pay and then local currency bills to pay, always come to account payable because system will create two account payable for you. Select the one in JPY. You can see here. So meaning that all our bills right now are in JPY. And then I can select the bills I want to settle. Let's say I want to settle this bill now at 90,000. You select the bank account to settle that bill. You can see we don't have any bank account yet set up for that bill. You can quickly add new. So you can say Bank of Japan. So let's say we have accounts with them and then Japanese yen. You can then impute the value. So this will be assets. So this is just a guide. If you're using your normal record or the accurate record, all this should have been posted when we're setting up our chart of accounts. So this is just a guide to help you understand how to use the system very, very well. Now, don't forget that every time you post, you must always select the date of that transaction. Anytime you're posting, make sure you select the date of that transaction. And then anytime you're posting a foreign currency transaction, make sure you update the exchange rate. Then we click on pay selected bills. So we have cleared that bill. So if you go back to your reports, vendors and payable, so if I double click here, you can see here to show me a summary. You can see this is the bill I just paid right now. So system will report in our home currency. So that is the invoice, receive payment. So at the point of doing this, we've also been able to talk about how to track inventory purchase. So how do you record business expenses? In QuickBooks, there are two types of business expenses. You have your credit expenses and cash expenses. In all my videos on this channel, I've discussed that multiple times. You use bill to track your credit expenses, credit transaction. You've received a bill from a vendor, meaning that they've rendered the service and you're here to pay them. You use a bill to post that. Now let's look at another type of invoice entirely. What if you are offering auto repair services? This is critical. The first one I discussed is if we're selling parts. What if it's auto repair service? How do you treat that? So let's go back to new. So let's assume again that we have a new client entirely, maybe like a bank, maybe like a bank. So let's say you have SVB Tech. So this is, or let's say this is a company. So SVB Tech. You click OK. Now SVB Tech is a new client. They want us to repair their car. This is service now. This is not a sales of parts. They want us to repair that car. So how do you post that? You come to item. Now you can see each of these car parts here. We're not selling them. This is a service. So that means we're going to add a new name, a revenue head, a service type called auto repair. And then this will go to auto repair service account. You click OK. So you see that we not only have our parts, we also have auto repair service, which might also be part of our business. Now, how much are we charging them? We're charging them 120,000 USD. And then what are we doing? Let's assume we have fault to repair. So this is the cost of repairing that fault. So this is an invoice for auto repair service. This is an invoice for auto repair service. So you have invoiced them 138,000 USD. Then you click on save and new. Now, when you invoice a client for auto repair services, note the invoice value is not your profit. That's the revenue generated. How do you account for the costs of that service? To account for the cost of that service, you need to look at the inventories that have been used for the purpose of that particular service. The inventory that was used to render that service. So how do you do that? You then go to inventory activities. You then click on adjust quantity on hand by value. So this is where you then select all the inventories that was used to render that service, because that inventory has to be accounted for, and the parts that are being used would be a direct cost to you. So let's say we use car engine and we use car tire. Now remember, there is an account head that this usage ought to be posted. So we'll go to adjustment account. It's going to be a direct cost account called auto parts consumption. Auto parts consumption. So this will then help you track all the inventories that was used to render services. So there is one part of your direct cost that relates to sales of inventory. There is also another part of your inventory that relates to usage and consumption. That is what we call auto parts consumption. And then we have 862 of this car engine in store. We have 1,100. So the question is, how many car engines did you use during that process? If you come to class fault, how many inventory did you use? Let's assume we use 10. You say minus 10. How many of car tire did you use? We use minus 10, for instance. So you can see that 862 minus 10 will give you 852. 1199 minus 10 will give you 1189. Can you see? So it is the cost of this minus 10 right here that we have used, which is 15,230, that the system will post to auto parts consumption. That's the direct cost for us. So that's how you account for inventories that are being used for auto parts repair services. So if you use your auto part to repair, to fix another car, you have invoiced the client for the services. Now you need to account for the costs. You need to account for the cost of that car. Now another thing again you can do is, if you don't want to come here and you want the client to know that, okay, I've used this particular item, you can also put it on the invoice and say, this is what I'm charging you for the auto part. This service part of this invoice is also fine. So whichever one you choose is also okay. But if the client said invoice us, just give us invoice for the cost of everything, then it's your own. It's left for you to know the cost of whatever you're going to use to do the job, or you have done the total cost, and then you can then use this method. I think this method for me makes a lot of sense because I'm able to reconcile the inventories I have in store with what I have on QuickBooks. So this inventory adjustment does not only help you adjust for inventories based on usage, you can also use it to reconcile. So at the end of the year, at the end of the week, maybe you've done your check and you notice that the quantity on hand in QuickBook is different from what you have in store. You can actually come here. This is what you have in QuickBooks. Then the quantity you have in store, you post here. The difference is what you now then account for as a direct cost. Now that depends on where the difference is coming from. If some part has been damaged, you need to also create an account called damaged parts, damaged auto parts, to help you track those part of your auto parts that have been damaged. Then if it's as a result of inventory usage, you map it to auto parts consumption. So whatever reason that has led to that difference would help you guide will guide you on the adjustment account to use to reconcile your account. So you click save and close. Now that means we've already adjusted for that part. So if I go to report companies and financials, profit or loss accounts, and then click on all, you will see that we now have, you can see auto part consumption right here. So we're not just limiting it to cost of sales, we are also tracking our auto parts consumption. So this is very, very important when you are treating your auto parts transactions in QuickBooks. So we've talked about sales, we talked about repair. So let's look at the other part of our course outline. The banking side is straightforward. Under the banking side, you are able to do transfer fund, record deposits, do your reconciliation. So with transfer fund, you can move money from one bank to another. So if you have money in Bank of America and you want to move it to JPY account, maybe to pay your foreign vendor, you can as well do that. So transfer fund helps you move money from your local account to your foreign account, or foreign account down to your local account, whichever one you want to do. So what are we transferring? USD. How many USD are we transferring? 1 million USD. Now at what rate? Let's say we're doing at 195. So the equivalent, the yen equivalent of this 195, 1 million USD will automatically be credited to our yen account. You click on save and close. So if I go to banking, use register, and then I click on Bank of America, so you can see here, you can see this is the fund transfer. And then if I go back to banking, use register, and I select my Bank of Japan account, you can see again, we have the equivalent. This is a transfer here from Bank of America. So that is how to treat your bank transaction. But most important part of this tutorial is to show you how you can customize QuickBooks for your auto parts business. And the critical part of an auto parts business is the inventory. And then how do you account for inventory purchase? How do you account for inventory sales? How do you account for inventory that are being used for repair? And then reconciliation is also very important. Now, with everything we've done so far, we can go to reports to see how it has played out. First, we're able to generate our sales report. So your sales report, you see your sales by customer summary here. You can see here sales by customer, and then you can also see your sales by item detail here to show you all the sales you've made as well as the item you sold. You can see here. Then you can go back to your sales. You'll be able to see your sales summary. You can even see your sales graph. Look at it here. Your sales graph will show you what part of your sale generates most money. You can see auto repair is generating 91% of our revenue. So we'll have an idea of that. So that's the importance of going to your reports. And then you have your purchase reports. You have your purchase by vendor. You're able to see all your purchases as well as the vendor that you bought those items from. So you go to purchase by item detail, purchase by vendor detail here, and then you click on all. You can see here. And then let's go back to our purchases too. So you have your open purchase order. Open purchase orders are requests you have made to your vendor that are yet to be fulfilled. Then we have this important part, which is inventory. So under inventory valuation summary, you can see here to tell you the quantity on hand of each of the inventory and then the value. Then we can also look at inventory valuation detail. This will show us a summary of our transactions for each of the inventory. So this help us to probe the balances we have in our record. So whatever balance the QuickBook is telling us, you can use this to check if those balances are correct or not. So that way you don't just accept your figures without probing them. So that will help you know if some transactions are omitted. Let's assume you're doing reconciliation or you're reconciling your record with the one in store, and then you notice the difference. This is what will help you to check, to compare, and be able to trace the difference. Maybe there's a transaction that you're here to post in QuickBooks. That's why the store is having a balance that is different. Or maybe there's a transaction that you have posted, but the stores are yet to capture that. So inventory valuation detail will help you to do that. Then let's look at our record. So we have our balance sheets. Yes. So this is our balance sheet Yeah. So you see, so with all that we have posted so far, you can see how the system is able to generate a statement of financial position for us. So that is very important. So this is a summary of how QuickBooks works for an auto store. So if you watch other videos on this channel, you're able to see how QuickBooks works for different line of business. And if this is the first time you're watching our channel, kindly hit the subscription button and turn on the notification bell for more information or to get notified anytime I post more videos. And if there are industries you want me to talk about, feel free to drop that in your comment section and I will look at it and share guide on how QuickBooks can work for your line of business.